The corporate regulator sues directors and former directors and management of the Star, alleging they didn't do enough to prevent money laundering. Consumer confidence picks up, finally, and former Prime Minister Scott Morrison named as the responsible person for the robodebt debacle, which ultimately forced welfare recipients to pay debts they didn't owe. It's Wednesday, the 14th of December, 2022. Welcome to Fear and Greed, Australia's most popular business podcast. I'm Michael Thompson, and good morning, Sean Aylmer.
Good morning, Michael. It's Wednesday. I know what that means for you.
It means there is a new episode of How Do They Afford That released today. And
exactly. What's it on this week?
This week, it's all about Christmas. It's all about kind of the most expensive time of the year and how to kind of do it in a way that you are still able to have the Christmas that you want without a huge amount of debt. Just a whole lot of tips and ideas, and you guessed it, Sean, hacks on kind of how to kind of manage the grocery bill, presents, kind of the travel, everything associated with Christmas. And of course, it's with Canna Campbell, the founder of Sugar Mama TV. Canna and I in the studio having a good chat about Christmas, and you'll be pleased to know that it was recorded just before I lost my voice. So I do not sound like this in the episode of How Do They Afford That?
Michael, you've got this is a very becoming voice you're carrying at the moment.
Yes, well, it happens about once a year to me, Sean, and for those few days, my voice just goes a little bit deeper, and I sound just a little bit tougher than I normally do, which is kind of, it's not hard, is it really?
No. Well, no, I mean, it's not hard actually, but we're almost at the end of the year. We're almost there. A few more episodes. That's it.
Just get through, just dragging myself through the final few weeks of 2022. We will get there. But yeah, check out How Do They Afford That. The links are in the show notes, but you can also find it wherever you listen to podcasts. Just search for How Do They Afford That. And immediately after this show today, Sean, you have a chat with Chris Jewell, the CEO of payments platform Zepto.
Yes. So it's kind of the back end. Well, what Zepto is trying to do is make payments and sort of for businesses easier. Now, that's a very generic way of describing it. They are producing the software that can help shifts of, could be money, it could be some other form of asset between people. Now, once we start talking, it suddenly becomes very clear if people like Zepto can improve the payment system regime and get seriously good regulation around it, the potential is enormous. It's very exciting.
Yeah, and it goes to that the technology that kind of underpins crypto and all that. If you take away the hype and everything around Bitcoin, etc., and you get to that technology that's underneath it, this is a company that's talking about how that can be used. And I found this to be a fascinating chat. It is well worth a listen to Chris Jewell later on. But the main story this morning, Sean, is a cracker. The corporate regulator is suing 11 Star Entertainment Group directors and executives, including former Chief Executive Matt Bekier and former Chairman John O'Neill, for allegedly failing to, quote, sufficiently focus on the risks of money laundering and criminal ties out of Sydney, Brisbane and Gold Coast casinos.
The Australian Securities and Investments Commission alleges Mr. Bekier and Mr. O'Neill breached their duties under Section 180 of the Corporations Act. They didn't stop there. ASIC has included current and former directors, many very high profile. Also being sued under that same section is current chair Ben Heap, Katie Lay, who previously headed up the Business Council of Australia, Richard Shepherd, he was the former CEO of Macquarie Bank, Gerard Bradley, he's Queensland's former treasurer, Sally Pitkin, who's currently chair of Super Retail Group, and former boss of Boral, Zlatko Tolochevsky. ASIC says the breaches occurred between 2017 and 2019, and the maximum penalty for each breach of directors' duties is more than $1 million. Now, late yesterday, Chair Ben Heap and Katie Lay both said they'll step down. So, already casualties from this action by ASIC.
And of course, Sean, the context of this is all very important. It comes after inquiries in New South Wales and Queensland both found the Star unfit to run casinos.
Though in both instances, the Star has been given a chance to keep operating under supervision while improving governance, we hope. There are also other charges aimed at senior managers who the regulator claims didn't address the money laundering risks that arose from dealing with the Asian gambling junket Sun City.
Sean, this sort of action must scare plenty of directors around the country who probably don't or maybe can't, perhaps, know the intricacies of the businesses that they're overseeing.
Yes, I agree with that. Plenty of directors or would-be directors will think twice now about what they're doing. ASIC Chair Joe Longo said the role of directors was critical to a company's general standing and performance, including how a company dealt with significant issues. He called it a landmark case from the point of view of directors' duties, and certainly he's right there. Now, in media interviews yesterday, he highlighted three key themes. The first one, directors need to address foreseeable, observable risks. He's arguing, or ASIC is arguing, that money laundering at a casino is a foreseeable risk. Second is that directors are entitled to rely on senior managers given they don't know the ins and outs of a business. So if you're a senior manager, you need to make sure you're informing the board of what they need to know. The third is that general counsels and company secretaries have very, very important roles and they need to do them well. This is going to be a fascinating case.
Yeah, sure will be. All right, how about local markets? What happened yesterday?
Well, the S&P ASX 200 closed just up a bit, 0.3% to 7,203 points. The tech stocks led the way, followed by the industrials and financials. ANZ led the big banks up 2.4%, while National Australia Bank jumped 2% and Westpac and Commonwealth Bank were both up more than 1%. The reason? Well, Bendigo Bank came out. Its share price rallied nearly 7% after it updated the market, saying its all-important net interest margin was higher and deposit volumes were up thanks to higher interest rates. People are putting more money in the bank rather than into shares. It was the best performing company of the top 200. The fact that its net interest margin was higher flowed through to the major banks, and that's why they did so well. The other end of the spectrum was a tough day for the miners. Gold digger Chalice Mining fell 8%. Iron ore groups Fortescue and Champion Iron dropped more than 4%. Mineral Resources was down 3.8%. Both Rio Tinto and BHP fell sharply as well. And finally, G8 Education's share price rose 2.5% after the company posted higher than expected earnings.
And international markets?
Well, Brent crude continues to gain ground. It's now trading above $79 a barrel. Gold has come off a bit over recent sessions, and an ounce of the precious metal is worth $1,780. And Michael, the Aussie dollar is trading around 67.5 US cents.
Okay, we'll be back in a moment with the rest of the day's business news. Sean, business confidence has turned negative for the first time in a year, but consumers have become a touch more upbeat, though it must be said that is coming from a very low base.
Yes, one of the features of this economic cycle has been confident businesses and pessimistic consumers. But last month, the National Australia Bank monthly business survey showed greater concerns about the resilience of the economy on the back of higher inflation and interest rates, and as global growth slows. There are a few signs of easing cost pressures among businesses, and labour costs were up 3% from a year earlier. On the consumer side, the Westpac Melbourne Institute survey shows a slight recovery in confidence, though there are still many more pessimists than optimists. Consumers were feeling more confident about their family finances for the next 12 months. They're more confident about economic conditions in the next 5 years. And the all-important one, which many economists think is the one that really matters in this survey, consumers said they're more likely to buy a major household good. So we have seen consumer confidence at incredibly low levels, recession-style levels. It just ticked up a bit. Hopefully, that's good news for the economy.
Yeah, hopefully so. Now, Australia's third largest listed company, Blood Plasma Group CSL, will get a new CEO in March.
Yes, the company's Chief Operating Officer, Dr. Paul McKenzie, will take over on 6 March from Paul Perreault, who has led the company for 10 years and worked for the group for about 25 years. Mr. Perreault will remain as an advisor for 6 months to help with an orderly transition. It's always been a very well-paid job running CSL. Now, the current CEO is regularly at the top of the salary lists. Last financial year, according to Financial Review, Mr. Perreault, though, had slipped down the rankings to be the 7th highest paid CEO. He's normally the top 2 or 3. Mind you, he still made $13.5 million. Not sure how much the new guy, Paul McKenzie, will be making.
Sean, one of the country's largest accounting firms, Grant Thornton, is trialling a 9-day fortnight without any cuts to staff pay.
Yes, Grant Thornton called it a counterintuitive response to the skill shortages. Boss Greg Keith is quoted in the Financial Review saying that over the past 2 years, there's been a significant uptick in work, and combined with a white-collar talent crunch, people are working long hours and are exhausted. Looking for solutions that would improve staff wellbeing without compromising on work quality, Grant Thornton settled on trialling a 9-day fortnight, hoping it will refresh people, reduce sick leave, and at the end of the day, improve productivity. Now, if the trial meets its performance indicators, and that's about maintaining the same training, business development, and billable hours as they would in a 10-day fortnight, also they need to improve client satisfaction, staff wellbeing, and talent retention and attraction, the firm will consider making it permanent. Remember, a couple of months ago, Unilever, I think, introduced the 4-day working week. It's great to see big organisations thinking laterally about how to keep their staff happy.
I was just thinking, Sean, do you think if Fear and Greed went to a 9-day fortnight, how's this for a proposal? That we don't actually tell anyone which day we're taking off. And so that way it keeps a bit of an air of mystery around it. Is there going to be a podcast today? Is there not?
Yeah, I don't know. It's a good way to run a business, but it'd be fun.
Yeah, it would. And maybe just that kind of mystery would kind of keep people hooked.
Yeah, maybe. Or we'd lose our audience.
That is a risk. I suspect it's probably a risk that we're not willing to take. Anyway, we will move on from my ideas. This is not the time for brainstorming. Prime Minister Anthony Albanese has raised the idea of a national gas reservation policy as a longer-term solution to lower energy prices.
Ahead of the vote on the government's energy package in Parliament tomorrow, remember that's the one that includes $1.5 billion in direct household support and caps on gas and coal prices, the Prime Minister came out and praised Western Australia's gas reservation policy. He said states like Western Australia and Northern Territory, ACT and Tasmania haven't been as impacted by exposure to global price increases because of that policy. We'll see where that one goes.
Sean, Australia and Vanuatu have signed a new bilateral security agreement to deepen security ties and pave the way for greater military policing and cyber cooperation.
On day 2 of the bipartisan delegation meeting with Pacific Island nations, Penny Wong, the Foreign Minister, said the agreement would be made publicly available in accordance with Australia's commitment to democracy, accountability and transparency. It comes as the Australian government looks to offer Papua New Guinea upgraded defence and security support in response to China's attempt to grow its influence in the region. Remember, earlier this year, China unsuccessfully attempted to strike security and trade deals with 10 Pacific Island nations. It had already done one back in April with the Solomon Islands.
Now, Sean, we talked about this one yesterday. There was plenty of fallout from the decision of payment system group Tyro to knock back a bid from a PE group, Potentia.
Major shareholder Grok Ventures, which is the Mike Cannon-Brookes company, said it was disappointed that the board had refused to engage with Potentia on the $1.60 per share bid. Now, $1.60 is about 60% higher than what it was trading pre-bid. But Chair David Thodey of Telstra fame said while some shareholders liked the bid, i.e. Mike Cannon-Brookes' Grok Ventures, it wasn't in the interests of all shareholders. Yesterday's Tyro's share price jumped 17% to be back almost to where it was late last week. Remember, on Monday, it fell nearly 20% after it knocked back Potentia's offer, and another potential bidder, Westpac, said it wasn't interested.
I mentioned this one at the top of the show, Sean. Senator Maurice Payne appeared before the Royal Commission into the Coalition's robodebt scheme and said that responsibility for the policy, which eventually led to many social security recipients repaying debts that they didn't actually owe, rested with the then Social Securities Minister.
And that person was Scott Morrison. Senator Payne was the first Coalition frontbencher to appear and said she couldn't remember many details about discussions surrounding the development of the robo-debt policy. Proposal documents outlined ways an automated system could crack down, was the way it was put, on 867,000 potential welfare recipients who received, again, I quote the documents, too much welfare. Now, the plan was to save the budget $1.2 billion. Instead, it left many welfare recipients out of pocket. They had been forced to pay debts they didn't actually owe. Also late yesterday, in fact, the Financial Review was reporting that Mr. Morrison sought secret authority over the Treasury portfolio in order to give himself final say on foreign investment proposals, undercutting Josh Frydenberg. That story just keeps giving. And Michael, finally, before we move on to overseas news, our hearts go out to the families and friends of the 2 police officers killed while on duty in Queensland on Monday evening. Both had been in the force for less than 3 years. Also, our thoughts are with the member of the public who had gone to help. The three were ambushed investigating a missing persons report west of Brisbane. The perpetrators, there were three in total, were also killed. Absolutely tragic.
Yeah, you're right, Sean. It was an absolutely horrifying story, that one. Moving on to overseas news now, and Sam Bankman-Fried, the former boss of the failed crypto company FTX, has been arrested in the Bahamas and will be extradited to the US.
Yes, FTX ran out of money and filed for bankruptcy on November 11. It's been under investigation ever since, having blown up billions of dollars of customers' money. The court-appointed executive overseeing FTX in bankruptcy said the company had been run with gross mismanagement, excessive leverage, and failures of internal controls.
Microsoft is taking a 4% stake in the operator of the London Stock Exchange and has agreed to spend at least $2.8 billion in cloud computing services from the technology giant.
It's a really interesting development in that market. That spending commitment will be spread out over 10 years, according to Associated Press. Now, major exchanges have recently begun partnering with tech companies to shift their technology infrastructure to the cloud. About a year ago, Nasdaq said it would migrate its North American markets to Amazon Web Services platform, while commodities and futures exchange operator CME Group inked a 10-year deal with Google to move its trading systems to the cloud. These are such massive undertakings and incredibly expensive. So it's really interesting that Microsoft has taken a 4% stake in the LSE as part of that deal.
Finally, Sean, Twitter has dissolved its Volunteer Trust and Safety Council, which was set up to advise the company on dangerous behaviour on its platform.
The council was created in 2016 to get advice from experts on how Twitter should tackle harassment, mental health issues, and child exploitation, as well as suicide prevention. But this week, the company said it was no longer the best structure to gain insights. It emailed the members, who are prominent individuals, only hours before a meeting was due to occur. Now, late last week, 3 members of the council said they were stepping down, citing Elon Musk's behaviour. Incidentally, they've been abused on Twitter since making that announcement. In recent days, Musk himself said that Twitter, under its previous leadership, had refused to take action on child exploitation. Its previous leadership have come out and said that's simply false. Musk has also been critical of the LGBTQ plus community and US Chief Medical Advisor Anthony Fauci. Don't think there's much more to say.
No, I think that's probably enough. Up next, Sean, is the Fear and Greed Daily interview with Chris Jewell, CEO of payments platform Zepto.
Yeah, all about kind of the back end of the payment system, including cryptocurrencies and lots of other things.
That's coming up next in the Fear and Greed playlist on your podcast platform or at fearandgreed.com.au. Thank you, Sean.
Thank you, Michael.
It's Wednesday, the 14th of December, 2022. Make sure you're following the podcast. Join us online on LinkedIn, Instagram, Twitter, and Facebook. And don't forget to check out that new episode of How Do They Afford That? All about affording Christmas, really. I'm Michael Thompson, and that was Fear and Greed. Have a great day.